What's going on, guys? Brian here. Today is Tuesday, July 23rd, 2024. This is a continuation in the daily recap price action videos. We will be focusing on the SPY, but SPY is applicable to the SPX, to the ES, to the MES, any derivative of the S&P 500. But to keep these videos concise, I want to just focus on the SPY here today. We will jump between the SPX and the ES just to look for additional confluences. The levels on the chart, you guys know at this point, are the gamma exposure levels. These are mapped out at the start of the week. Before the market actually opens, I like to run a gamma exposure profile, and then I map out the significant strikes. You guys can take note of the type of price action that occurs around these sticky strikes. I identify these types of days as a choppy market. What makes it choppy to me? If the market goes up, down, at least 4 times in the same day, that's pretty choppy. Or if there's not much of a change from the open to the close. So in this case here, the market moved about 0.15%. It went nowhere, even from a net change perspective. So from yesterday's close to today's close, the markets barely moved today. The range was not very high, so it was a low volatile. It was a choppy day. And yet there was a good trade opportunity, in my opinion, right here, as well as a short right here. And we will take a look at some of the confluences in which I spotted. The point of these videos is to showcase you guys the same way a trader such as myself might read or interpret price action, the same confluences we will be looking at. Obviously, I'm using the quant trading app scripts. On this chart right now, there are none of the quant trading app levels, but we will take a look at those in a second. Just by starting at looking at the clean price action, we can see that there was a demand that builds up here yesterday, or it was some sort of supply early in the morning. Price broke out, it retraced, and then it held. So this zone just from yesterday is already something you would want to be aware of. You take the information from the previous day and you carry it into the next day. So here we have a clean zone, and then broke. We look at the type of price action that occurred here. This morning, market opens here, it pushes off, it retraces back to this area before it pushes back off of it again, and then it comes back into this zone. So that zone, just off of, if you're a clean price action, supply and demand type of guy or girl, that's something you want to be aware of. Yesterday's high, yesterday's low, yesterday's pivot points, all important before we start looking at any of the custom studies. We are in the midst of earnings. So after the markets closed, Tesla was reporting earnings, as well as Alphabet or Google. So one of the things you want to tell yourself at the start of the day is if there's some sort of big catalyst later in the day, after hours, maybe the market is going to want to wait to see. So if you're starting a day like this, and the reason, obviously, this is hindsight, but the whole point of this, again, is for the next time, carry the same information. There's 4 earnings seasons per year. There's X amount of FOMC announcements per year. There's X amount of CPIs per year. There's X amount of PPIs per year. If you know these dates, we know when they're coming up. The same thing will carry over the next time, the day before some sort of major earnings, the day before the market is a little bit of uncertainty. If the market is around some sort of sticky gamma price, maybe expect some sort of choppy market. Lower your expectations for how large of a move or how strong of a trend we might get. These are not the type of days in which you want to enter the market expecting some sort of major trend. Doesn't mean it won't trend. That could be a pleasant surprise if you're a trend-based trader, but for the most part, the expectations for a trend can be low. Now let's take a look at our overall dashboard here. And then let's just jump into the quant trading app scripts. So these are the custom studies right here. I'm just going to hide these, turn it on. Everything that's plotted on the chart comes straight from quant trading app. The only thing non-proprietary is this gray level right here. This is VWAP, and then we have a 9 exponential moving average. Both of which, in my opinion, were pretty irrelevant today. It was not a momentum day. This layouts that I have shared, the 3-minute time frame, using the 9 EMA, using the VWAP. Again, this is not something that I invented, but this strategy has proven the test of time, and it's very simple, but it is effective during days of a trending market or during days of momentum. What would be momentum? Review the previous videos from last week when we have this type of trending days where the market has a massive move in one direction with a strong decline in the EMA right here, a sharp decline in VWAP. Days like this, VWAP is pretty flat. There's no major gap up or gap down overnight. There's nothing really to indicate any signs of massive momentum. But right off the back, if we just look at this chart, you guys can see right here, we had pressure coming in up here and sellers were becoming a little bit more aggressive and price broke down. This is, again, the intraday quant trading app script. Just from watching the past few videos that I've released last week into this week, I believe at this point we're on video 5 or 6 in this series, you guys have been able to see what type of price action occurs daily. Yesterday we had a clean trade off of it. Last week we had a couple clean trades off of it. Break and retest or some sort of breakdown at the level. Price pushes up into the level. It is getting weaker and weaker. In real time, obviously, we don't know what's going to happen regarding the next candle, but you can see the pressure coming in here. This at one point did look like a bull flag. So during this consolidation, I wouldn't necessarily recognize this as an easy trade, nor would I recognize this as an A+ type of trade, because price action easily could have gone the other way. If you had some sort of additional confluence to short, yes, it was there. It's not the type of setup I look to short, which is why it's not a great trade from my playbook. The trade that I liked was earlier here in the day, following the pattern that we've been seeing right around 10:30. We've been getting really nice trades. Just take a look at this one here yesterday, boom. Take a look at this one here, boom. If we zoom out, take a look at this one here, boom. Take a look at this one here, boom. It's been occurring after the 30 minutes, after the market opens, and this has been making morning trades even less stressful, because more times than not, I'd rather just wait. The market is telling us when's a good time to take a trade, or at least a clean one. This type of price action can be pretty stressful, at least for me. To another trader, this is a break above the previous day's high, a retracement back to VWAP. Price broke out, pushed a little bit higher. They're scaling in right here at VWAP. They're closing out right here. I'm not that good at this style of trading. This is much easier to me. If price comes back to the opening prints, we start seeing some sort of buyers becoming a little bit aggressive. We see a reversal here. We get momentum up to the upside. This is a nice reward. On top of that, it is following the pattern just from the video that was shared yesterday. We had this double bottom right here. Here's our double bottom at a significant area. Yesterday, it was the 50% retracement. We were already prepared for this from the video over the weekend. How can we be prepared for this level here today? Well, look at yesterday's price action. It was right within this zone. Market opens here, you sit on your hands, you wait, it comes back to this level, here's an opportunity. Then we start looking for confluence. Yes, if you're short, there was a trade here, back down. These are for the quant trading app traders. We have these levels. They're plotted on our charts, by the way, as the market opens. The script is copy and pasted from the quant trading app website in pre-market. So these levels are here. We're not drawing these levels after the fact. They are here before price action gets there, which means there's plenty of time to prepare, because you already know where the key zones are for possible inflection points. Or if price was to break down below it and it retrace, we know to expect some sort of continuation. The same thing to the upside. If the market broke above this, that is an indication that we are in a trending day. There is enough momentum. If it retraces back to this zone and VWAP rises to meet it, that creates a trade opportunity for us to ride the momentum as a continuation pattern. That is not what we are seeing here today. VWAP is flat. It's generally hard to convince me to take a short on the SPY to begin with. So these are not trades that are A+ in my playbooks. But for some of you guys that may be better at shorting, I'm just pointing this out for you guys. For me, the trade is down here. Now let's spot our divergence. Exactly in the video shared yesterday, look what we got here today. The same type of divergence. The ADD was here, then it pushed up. The market retraces, the ADD is all the way up here. That is bullish divergence. Why is the ADD all the way up here when the market came all the way down? The same thing like yesterday. ADD was here, the market pushed up, and then the market came all the way back down. Why is the ADD up here? The ADD pushed up and it stayed up here. The ADD pushed up and it stayed up here. Why is the ADD up when the market is coming back down and forming a double bottom? That is the question that I'm considering or looking at. This is our price action from yesterday. Market went up, it went all the way back down. The ADD did not go all the way back down. The market went up, then it came all the way back down. The ADD did not come all the way back down. So we have here to here, we have here to here, but on the ADD, it looks like here to here, here to here. That is bullish divergence. I'm stressing this because this is too simple of something to not be able to look at regardless of the level of trader you are. You throw up the ADD on your chart, you look for some sort of divergence. If price is at one point and then it comes back to the same point with the SPY, take a glance at the ADD. There are other market internals in which you can use. I want to focus just on the ADD for now because I think divergence is a powerful tool. that divergence is not going to work out 100% of the time. Do not watch one video on YouTube. You see some guy say like, oh, if the ADD is up and the market goes up and comes back down, I have to throw my whole account in and go long because it means the market's going to go up. No, that is not the way the market works. You are looking for confluences to improve the probability of the trade working in your favor. The ADD can provide an edge, but you're trying to combine multiple confluences. This is built on the context. We started this video with, this is a significant area from yesterday's price action. Then we start layering additional reasons for why we want to take the trade here. This is also the opening prints. Buyers for the day are going to want to defend this level. We already have 3 reasons right here. Price action from yesterday, or yesterday's, closing power hour type of consolidation. We have a double bottom here. So we have the opening print here. We have 1, 2, 3, and now we have bullish divergence with the ADD. That is 4 reasons that takes not even 3 seconds to spot. When you look at a chart and you see this, you're like, oh, ADD is up here. Price action comes back. Maybe you buy a couple futures contracts. Maybe you buy a couple call options, whatever your instrument is that you trade. That's how long it takes to be able to spot this divergence. I will be showcasing this in many videos for the rest of this year to hopefully help you guys identify and spot these trades. Now, being able to understand the gamma exposure levels adds some sort of extra layer of context to price action. This is a key strike here. It's natural for the markets to be in an overall net positive gamma state, which means it always wants to try to get back to positive gamma. Below here is negative gamma territory. So it wants to be above this strike here. It's going to fight to be above there. It doesn't mean it's going to stay above there. If we take a look at our VIX at the time for bears, as the markets hit that peak at the top, the VIX was hitting this 2 sigma support level. So this right here, market is up here, the VIX is down here. This is a level that can act as a supercharged support level for the VIX. The VIX has broken down below this level many times before. Naturally, the VIX is going to have some sort of a decline, but we are in the midst of earnings season, so there is a reason for it to remain elevated. However, for the quant trading app traders, that is the last line of support for the VIX for this week. It lines up right here with our chart, as we can see. So as a bull, I would not expect price to go much higher. This is extra confluence right here. If for anyone looking to short, you can take a look at this and say, hey, the VIX is on support. Maybe the VIX will bounce from here. Using the VIX as a proxy for implied volatility, maybe IV will increase. The price of puts will hold their value. The market is at a level in which it may reverse and come back down to here. It's in an area in which price action is pretty sticky from the gamma exposure profile. There's a lot of just noise and mess up here, versus if this level was to clear and price was to hold above this, naturally I would just be looking at some 560 calls, because that's just the natural next place for price I would expect it to go. Same thing in between this area here. It's pretty open. I believe 554 is also a significant strike. As the week progressed, the gamma exposure profile changed a little bit. So this whole area, as far as I'm concerned, is a mess. This is all iron condor territory. This is all iron butterfly territory. But for now, I'm more focused on momentum trades. I'm looking for some directional trades. I'm looking for some scalps, looking for 10 to 20 point moves on the ES, as I don't want much market exposure right now. If we switch over to the Qs, let's see what type of additional confluence we would have had. Turn on our studies. Same thing right here. The Qs are hitting their intraday zone on for the quant trading app members. Where was the Qs? 2-day anchored VWAP. Buyers aggressive right here. Spike in volume right here. So we got a spike in volume for the NASDAQ. We got buyers showing that they are aggressive. Prices holding the 2-day anchor VWAP. We have a nice little quick momentum scalp right up to the intraday zone. This is the weekly sell zone for the quant trading app members up here. So price is being met with a little bit of resistance in that territory. If we switch back to the SPY, sell zone up here. So yes, that's something to have in consideration also. Lastly, let's take a look at the quant trading app trade engine. So this is the SPX data feed. Around the time here, you guys at this point know max pain acts as a key strike throughout the day for support and resistance purposes. Can act as a magnet, but more times than not, it's more reliable just to consider it a supercharged support and resistance level. This is the neutral strike, so it's just pretty much above or below this level is pretty neutral. So if price is above this, it's kind of a bullish day. Price is below this, it's a little bit of a bearish day. Price is generally choppy around here. Consider it just another support resistance level. So right in this area, 565, this is our support. Price breaks down and it's holding this level. This is printed 10:50 Eastern time. So that is right around this area here. So right when price is coming down to the support level, I'm just pulling this up just so you guys can see some additional confluences. We have confluence right here. Expect some sort of support. We're looking at the SPY, we're looking at the ADD, we see bullish divergence in the ADD, we see the SPYs at a double bottom, it's returning to yesterday's high. This is a zone in which we would expect some sort of reversal. Here's our extra reason. Here's our extra reason. The quant trading out power strike is all the way at 5,600. Where's the absolute gamma? It's at 590. Both of these is higher. So the absolute gamma strike is higher. The power strike is higher. Not that the power strike is that relevant early in the day. Again, it's more important for the later half of the day, unless it's latched on to something like the absolute gamma strike or the max pain strike. In other words, if absolute GEX and the power strike was also at 565, this to me would be our most significant support strike for the day. And if price was to break down below it, I would imagine it would have struggled to get back above that. That is not the case here today. Both of them were pointing up. It doesn't mean they're going to stay pointing up because, as you guys know, gamma exposure is going to move with price action. This is our gamma profile. To me, you could just throw this right out the window. It's pretty split down the middle. If the spot price is here and we see a decent amount of positive gamma here, we look to the south, we see negative gamma here, and price is right in the middle. This is split. This to me just looks like an iron condor. It means an iron butterfly. It means expect some sort of choppiness around max pain. However, with price currently right around this area, the expectation could also be it's going to gravitate towards one of these two, but there's not enough momentum in any direction to think it's going to break out of any of these ranges. That's not what this type of profile looks like. At the time, we can see that more of the speculation is to the upside, or at least there's a deep concentration at the 5,600 calls. This is the volume here that's printed in the background. So the blue is the call volume, and this light peachish color here, coral color, is the put volume. There isn't really any puts that are standing out. The highest put at this point right here would be the 530 with 20,000 volume, but there's significantly more call volume right here on the 600 strike and the 595. And the 590 calls, as we can see, even this strike right here, the 580. So in other words, a decent amount of speculation to the call side is happening as price is here. So this little mountain of volume can be an extra reason for why one might think the market is going to go a little bit higher. And what do we get? We get price holds the level. Ultimately, let's just jump around to the end of the day. I can play out the whole video like I did last week for you guys, but for now, I want to wrap up this video here. So just want to show you guys how this ended up playing out. Again, you can pause the video right here, analyze this if you will. The main point in which I wanted to take away is this right here. This was the highest call volume, so price struggled to hold above that. QTA members, you guys can review when did that happen. There's a lot to learn just from this feed, but I want to wrap up this video as I think there was enough information packed into this. Guys, if you're enjoying this series, if you're enjoying these daily recaps, let me know in the comments down below. They're much simpler for me to produce these videos, hence why the frequency is increased versus some more of the complicated videos that I've shared in the past around complex options orders. This is largely focused on price action and just pointing out the confluences for you guys, being able to spot these opportunities so it gets to the point where it just becomes second nature, the same way in which I'm just describing these things. This is something that you eat, sleep, and breathe after you've been looking at it for a while. Just wanted to pop back out on the dashboard just so you guys can take a look at. There were some extra confluences on the futures, but I think you guys are getting the point for now. I don't need to point out every single confluence every single day. Thanks for watching, guys. Leave a comment down below, like the video, and share it if you learned something. Catch you on the next one.